Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and today we're going to be talking about some changes I recently made to my portfolio in the form of a sell. If you guys do enjoy this type of content, consider subscribing to the channel. I'm on my way to 2K and I would appreciate it a ton. As a reminder, this is not financial advice and I'm just merely sharing my opinions on this channel. Now, before we get started, I would like to take a look at my portfolio real quick by looking at my portfolio dashboard. So I have a total of $29,382 invested. My portfolio value sits at $39,736. That gives me an unrealized gain of $10,354 or a total return of 35%, which is down from what we saw in some previous videos. Now, the market has been extremely volatile lately with some decent buying opportunities on the broader market in the past week alone, but so far I have not contributed much more money into any significant positions. So far, I have earned $1,111 worth of dividend income, and going forward, I'm projected to earn $718.60 per year. Now, the majority of my portfolio is concentrated into slightly lower yielding positions. I prefer lower yielding positions because I think they offer more dividend growth and a potential for higher total return in the long run. Now, currently I do have about $6,540 sitting in a money market fund waiting to be invested into any buying opportunities I see. And I have 24 total holdings minus one holding because I did sell out completely of one position. So without wasting any more time, the position I recently sold out of is Coca-Cola. Now, I'm sure you guys are very familiar with Coca-Cola. They're a huge global brand, but I did find some fun facts I wanted to highlight real quick. So Coca-Cola is the largest producer of US carbonated beverages, making up 42.8% of the market share, so they definitely destroy any sort of competition they have. Based on what I could find, there are more than 10,000 Coca-Cola soft drinks consumed globally per second, and they have a product portfolio exceeding 3,500 beverages and 500 brands. Now, real briefly, in the most simplest form possible, the reason I bought Coca-Cola stock initially was because I thought they were a stable company with consistent dividend growth, and I still think that point is very much still true. But looking at why I decided to sell my position, there are a couple of reasons for that, and we'll take a look at them right now. So the first reason is that this holding of mine was making up too small of an allocation in my portfolio, and the way I saw it is I either had to add in more to this position or decide to remove it entirely from my portfolio. Now, to show you what I do mean by that, we can take a look at the My Pies section of my portfolio. So right here, I have different pies that show me different allocations within my portfolio. So in general, I divide my portfolio into 3 different sections. This is just to help keep me organized since my brokerage does not offer these kinds of visuals to help me with my investing journey. My first section is the Key to Success section, and my target allocation is about 50%, with divine dividends following that at 40%, and my speculative or turnaround section at about 10% of the portfolio. You can see that this pie right here helps visualize that, and it also has my portfolio value along with my cash position sitting right here. The cash position is not included in my total portfolio value. Now down here would be my Key to Success section, this would be my divine dividend section, and this is my speculative section. And if we click the slices button, it will open it up to see what holdings are inside each of these sections. So I'm not going to get into the other section of my portfolio today. If you do want to take a look at that, I can pin a video up here that shows a better job of that. But today we're going to be focusing on this divine dividend section because that is where I hold my Coca-Cola position, or where I used to hold it before. So you can see right here that Coca-Cola is highlighted in red, and that is because it has been on a chopping block for quite a while. I was deciding whether I wanted to add more into this position or whether I wanted to sell it completely, and of course I end up going with the selling it completely option. I only hold one share of Coca-Cola, 1.05 if you include dividends reinvested, and it only makes up 0.2% of my total portfolio, which is a very insignificant amount. Basically, if this position were to 4x or 5x, it wouldn't actually make that much difference in my total portfolio value, which is why I decided that it was not worth holding going forward. Now, in terms of why I didn't just add more into this position, we'll take a look at it in just a second, and I think you guys will understand why I decided to sell it instead. So the next reason as to why I sold and did not add more into this position is because Coca-Cola did not align with my investment criteria. The main reason for that is that they've had both slower earnings growth and also slower dividend growth than what I would like to see in any of my investments, or individual investments I should say, and I thought that money would be better allocated elsewhere. My main goal is to maximize my total return in my portfolio, and especially with my individual holdings that are not, the S&P 500 ETF VOO, I prefer to take a slightly riskier position that has more potential for both dividend growth and total return. Now that kind of does go into my last point with better opportunities. I think there are better opportunities elsewhere for this money. If I don't want to hold it in Coca-Cola, I can at least hold it in SCHD if I want higher dividend income, or if I want higher potential for growth, I can hold it in VOO, which are both very well diversified ETFs. Regarding both revenue and earnings growth, basically you can see right here, the revenue has been growing nicely over time, but at a pretty slow rate compared to a lot of other companies within my portfolio. And if you look at the earnings per share growth, we can see a pretty similar graph where it does grow over time, which is something that is definitely a positive about this company, but it does not grow at an accelerated rate. Now, this video is not meant to bash Coca-Cola at all. I think it has a place in many investors' portfolios, and I think there's a reason that a lot of investors like to hold this position. But for my personal risk tolerance and time horizon, I don't think it is the best choice for me. I do believe that this company will continue performing well into the future, but lately a lot of their revenue growth has come from direct price appreciation, and with the amount of inflation we have seen, the price for Coke has skyrocketed over the past 2 years, and I'm not sure they continue growing it as quickly as they have before. If you guys do enjoy these type of deeper dives, taking a look at my exact buy and sells for the portfolio, definitely leave a like on this video. It helps the channel out a ton. Now, in terms of their dividend track record, we can take a look at their dividend scorecard. They do have 61 years of consecutive dividend growth, which is one of the most amazing things about this company. They are a dividend king, which is fantastic. Their 5-year growth rate is sitting at 3.65%, which is not bad at all. It is definitely outpacing inflation, but compared to a lot of other companies, it is much slower, and I think the potential for future growth for the dividend is also pretty limited. The payout ratio currently sits at 67.74%, which is not too bad at all. For a more mature company, I think it is totally fine having a higher payout ratio because they do pay a lot of their cash flow out in the form of dividends. Now, for those investors that do like a higher dividend yield, it is sitting at 2.82%, their current dividend yield looking forward, and that's not too bad at all. But like I was saying before, there are better opportunities elsewhere in my opinion. I think SCHD offers both higher potential for price appreciation as well as higher potential for both dividend growth and a current dividend yield that is higher than Coca-Cola's. Now again, I just want to reiterate, this is not to say that Coca-Cola does not have a place on investors' portfolios. I just think that there's other ways to either hold the company within an ETF or of course just other alternatives that are also well diversified and stable that offer slightly better dividend yield as well as slightly better dividend growth. So I haven't used this sheet in my portfolio for a while now, but I did make it and I was using it in a lot of videos previously when I was doing more stock spotlight style videos, but I wanted to use it here in order to show you the dividend growth history and the free cash flow per share growth history for the past 5 years. I think this really helps paint a better idea of what I'm trying to talk about with the slower dividend growth and slower earnings growth the company has had. So if we look at dividends, we can see that dividends have been growing consistently, but from 2019 all the way to 2021, the growth was pretty slow at under 2.5%. And if we look going forward, it did accelerate a little bit, 4.76% from 2021 to 2022 and 4.55% from 2022 to 2023. But I do believe a lot of this came from their pricing power and being able to increase the price of their carbonated drinks at a very accelerated pace, which I don't think they'll be able to do going into the future. Now, in terms of free cash flow per share, this is a very important metric to take a look at, especially for a dividend growth stock, because dividends are usually paid out of a company's free cash flow. If a company is unable to consistently grow their free cash flow per share, then their dividend growth is at risk, and also their dividend itself is also at risk. So from 2019 to 2020, the free cash flow grew by a similar amount to the dividend growth at about 2.54%, and then from 2020 to 2021, the free cash flow grew substantially by almost 30%. However, going into 2022, the free cash flow per share actually did see a pretty large drop at minus 15.7%. And then back to 2022 to 2023, it kind of had a very normal growth rate at about 2.27%. So as you can see, the free cash flow per share is growing at a consistent rate over time, but at a pretty slow rate on average. Now, looking at their valuation, the company has historically traded at a pretty high valuation at 24.62. It is a premium valuation compared to a lot of other companies. Now, just to put that into perspective for you, Google actually trades at a lower valuation than Coca-Cola right now, especially their forward-looking price to earnings ratio. So, take that into account when you're deciding whether or not this is an investment you want to make. In terms of growth, like I did mention, the revenue growth is pretty slow at 5.27%, and looking forward, it's actually expected to slow down even more than that, which is not the greatest look for this company. Now, one thing I will say in their case is that their profitability metrics are pretty solid. Their gross profit margin sitting at 60.53%, and that's fantastic. Now, something I haven't gotten to show you guys yet is my initial buy for Coca-Cola, so I'll pop it up on screen to show you the actual brokerage transaction, but also here my order history tab, it's where I input all my buys and sells for this portfolio. So on October 7th, 2022, I bought one share of Coca-Cola for $54.74, which I thought was a pretty good price at the time, and I still agree with that sentiment right now. Now, I only bought one share, and I'm not really sure what I was thinking at that point, but I was definitely buying a lot fewer shares back then. As you can see right here, one share of VOO, one share of Altria Group, one share of Microsoft, and one share of Apple. So I was doing much smaller purchases than I do these days. Now, looking at my sell history, I sold Coca-Cola on the 25th of July, and I'll pop up the brokerage transaction right here, but I sold one share of Coca-Cola, or 1.05 shares actually of Coca-Cola because of dividend reinvestment, at a price of $66 per share, and that amounted to a total sell order of $69.61. So doing the math, if we take our sell order and subtract our initial buy price and divide it by our initial buy price for this position, we do get a total return of 27.16%, which is not bad at all. Now, I forgot to directly clarify, but I did hold this position for a little under 2 years, so I think it's a pretty decent total return for such a slow growing company. Now, looking at my position in my portfolio holdings tab, we can see that if I would have held it actually till today, it would have been worth $72.39, which would have been a 32% total return. So if I held it a little bit longer, I could have gotten a little bit more return from this company. But really, in terms of gains, you can see what I meant. Since it's such a small position, it only makes up $17.65 of unrealized gains had I held it till today. In total, this position paid me out $3.32 worth of dividend income, so a very small amount, and going forward it was going to be paying me $2.04, so I will be losing that out of my portfolio until I decide to move this money into any other position. Now at the moment, I have not yet decided where I want to move the $69 I got from selling this position into. I'll probably be holding it off on the side until I see a good buying opportunity. Hopping back over to Seeking Alpha, we can see that when I bought it on October 7th of 2022, I actually did see a pretty significant dip in price before I purchased this company. So I actually kind of bought it very close to its bottom during that year, which is not too bad at all. Mostly luck, of course, but I just saw the opportunity and thought I should buy one share. Now, if we fast forward into 2023, we can see that the price actually dipped below that in October 9th of 2023, but I was no longer looking to buy any more shares of this company. It's when I already made up my mind that I was going to sell it at some point once the price appreciated back up. Now, after that, we can see that Coca-Cola's stock price did shoot up pretty quickly, and that's of course why I decided to sell my position. The company was very close to its 52-week high at that time. Now, looking at their 10-year performance, you can see that 67.54% is not too bad at all, especially once you include dividends being reinvested back into this holding, but of course, it's not by any means outperforming the S&P 500. Now, graphing Coca-Cola versus the S&P 500, or in this case VOO, which is an ETF that tracks the S&P 500, we can see that VOO is outperforming Coca-Cola by a decent amount. However, in terms of total return, in the 3-year time frame, Coca-Cola actually wins, sitting at 32.81% total return, whereas VOO is only at 26.21%. But then zooming out to the 5-year time frame, we can see that VOO almost doubles its return compared to Coca-Cola, and of course in the long run we can expect that same type of performance. In situations where there is an economic downturn or a recession, Coca-Cola tends to perform a little bit better than VOO, as in it does not drop as aggressively as VOO does. But if you have a long time horizon or are looking for the maximum amount of total return, you're most likely going to outperform Coca-Cola by just buying into an S&P 500 ETF. As always, that does bring us to the end of today's video. I really appreciate you guys watching today's video, and I hope you found it useful to see why I decided to sell my position in Coca-Cola. If you guys made it this far into the video, definitely comment down below whether or not you agree with my decision to sell this position, or if you have done the same with your portfolio as well. If you don't own any Coca-Cola stock or don't plan on selling your Coca-Cola shares, that's fine as well, but let me know if you've been selling any other companies in the meantime. Also, if you do have any feedback regarding the pace of these videos, let me know down below as well. I have been trying to slow down the videos just a little bit. I tend to talk a little bit too fast when I go through these videos. If you guys haven't yet watched the video where I talk about Warren Buffett selling his position in Apple, definitely check it out right here. And if you are interested in seeing my analysis of Microsoft stock after the earnings, check out this video right here. Now, don't forget, the best time to invest was 10 years ago. The second best time is today. Other than that, I want to thank you guys for watching, and I will see you next week.